Educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We've got to add a little addendum to the show map today, so we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jebb here, and in today's video, we will be discussing the Bitcoin price and how it is actually moving to the upside for the first time in a major way in the last several days, currently sitting at $21,200. We're also going to be talking about the unemployment rate, which has finally come out ahead of the most recent projection by Dow Jones, up to nearly 400,000 new jobs. We're going to be discussing what those unemployment rate numbers mean and what they could actually be telling the Federal Reserve in regards to how they may go about raising interest rates, how much the Federal Reserve will be raising interest rates, and we're going to discuss the entire economic whirlwind going on right now and what the Federal Reserve is doing to try and curtail inflation and also at the same time fend off a recession. We're going to talk about raising rates. We're going to talk about printing money. We're going to talk about unemployment figures. And we're, of course, going to tie all of that back into how it affects the short, medium, and long-term price of Bitcoin. This is Coffee and Crypto. We go live 10 a.m. Eastern every single weekday, Monday through Friday, bringing you the latest technical, on-chain, and fundamental analysis. So make sure that you tune in every single weekday. Subscribe to the channel, hit the like button, hit that post notification bell so you'll be updated every single time that we go live. I am joined, as always, by my co-host, T.A. Tim. How you doing, Tim?
Good morning, everybody. You know what I'm excited about today? First of all, it is Positive Friday.
It is Positive Friday.
It's Positive Friday, so we're going to keep things positive
Bitcoin's
here.
price knows that it's Positive Friday.
It's an easier day to be positive because there's a lot of positive things happening right now in the market, on the charts, and in the news, but we're going to talk about that more later. But you know what's even more positive today for me, Jebb?
What?
I'm going to win the HODL trophy.
Oh.
So,
well, that sucks.
That's not positive.
I'm
It's
sorry.
good.
It's my first week.
Yeah.
It could be
positive.
good, but it's not. See, I
It's
had a
positive.
positive spin on how bad it is.
Back in the W columns with the HODL trophy.
Yeah.
Speaking of someone who's won last week, keeping it positive, Smay, how you doing this morning?
I'm glad you asked. I'm doing very positively this morning, guys. I'm doing great. I'm actually, just overall, my trajectory. Oh, wait. I need to show it to the camera. This is my trajectory. This is my mood. This is my success. This is how I feel about you guys. This is how I feel about everything. This is how I feel about Tim. This is how I feel about Jebb. This is how I feel about everybody in the world. This is how I feel about bad people. This is how I feel about.
Because there's still hope.
This is how I feel. This is how I
Still
feel.
hope
This is how I feel about crypto. This is how I feel about Reels on Reels. This is how I feel about all these things. I love all of you guys.
Is that how you
Anyways.
feel about the green names?
Oh, and you know how I feel about the green names? Just straight vertical.
Boom.
Like
Straight
that.
green.
So I'm gonna read some green names here this morning. We have Elliot Locke. We have D's Nuts. We have Mitch Shaw. We have who else we got here? We got Groovy. We got Matt C. We have Crypto Jebb is in the chat. We have Crypto JMP. We have Cran Roofing Incorporated. We have Agent Gold. We got Win Peoples. We got Cyberfix Online. SEO by Bradley Kellum.
SEO by Bradley Kellum.
We have Sultan of Salt.
I know that guy.
We have Tristan Williams. Who else we got here? We got Crypto Alchemist.
Martin Siebels.
We got Martin Siebels.
Martine
Siebels. We have Kasha Cats. We have the Phil Ossifer.
That's a great name.
We have T.A. Tim.
Yeah,
I know
Who's
that
guy?
I know that guy. That guy has a beard, I've heard.
I bet he probably does. He sounds like a guy with a beard and wears hoodies in 90-degree weather. That's the kind of guy.
Why do you do that, Tim?
Dennis Pizarka. Shout out to Dennis Pizarka.
Shout out to Dennis Pizarka.
Honestly, I told Smay the other day, I'm going to start wearing shirts probably more often here.
It's starting to get toasty.
But one of the reasons why is outside is definitely hot. But we keep it nice and cool in here because last week I wore a shirt in the office.
Yeah.
And I actually at one point was a little chilly.
Yeah.
So
I just don't understand you wearing a hoodie and shorts. Like,
That is because that has to do with.
You're like that kid from school.
That has a lot to do
Were
with
you about to do
my
a leg
legs.
reveal?
I will
Leg
literally,
reveal?
I'll go snowboarding in shorts. Like
Yeah.
What?
I'm very,
Just so you know,
very warm. With
I'm
my
the
legs.
same way with my legs. I'm the same way with my legs.
I
I
hate
actually
I guess I get
fully
that, actually.
understand it.
The worst thing in the world is having to go to like business meetings where I have to wear jeans or something. And
I always
Yeah.
wear jeans.
Oh,
it's
I
the
get
worst.
scared.
I don't know how you do it.
I
it's
always
the
wear
worst.
jeans and
I get.
hiking boots.
I mean, it's an inside joke, but I get scared when Tim wears jeans.
Yeah, Smay says it affects my entire personality.
Yeah, if he
kinda
wears
does.
jeans, he becomes scary.
It
I
actually
don't,
kinda does,
you know.
that's true.
But anyways, this has been the longest intro I think in coffee and crypto history. So I'm gonna
I'm
send it
not
back
sure
to
about
Jebb.
that. I don't think that's accurate. But
probably
we are
not.
going to go ahead and jump into the market pulse because we have quite a lot to discuss here. Positive Friday. U.S. Treasury develops framework for international crypto regulation. Why is that positive? Because regulation is coming just like winter. Hopefully, it's 100 and something billion degrees down here. And this document is the first publication from the department to stem from President Biden's executive order on digital assets. You can see Janet Yellen here looking like she just wants to come for Bitcoin again. But nevertheless, U.S. Treasury Department published a fact sheet Thursday outlining how it could work with foreign regulators to address the crypto sector. So that's wonderful. Mainly just going to read you the headline here. Not going to jump into too much detail on it. This is developing. So Positive Friday. We love seeing regulatory clarity. We just hope that the regulation is also positive. Now, not really sure I can spin this one in a positive way. So I'm just going to read this because this is actually just
I'll spin
really
it.
sad.
I'll do my magic.
Okay. Would you
Here.
like to
No,
introduce
you
this?
do the story and I'll spin it.
Japan's former prime minister, Shinzo Abe, was assassinated at a campaign event. And that's going to send shockwaves through Japan. And we're very sad to have to report this. Shinzo Abe was, as far as I'm aware, a very beloved leader in Japan. So we're sorry to hear that. If to make it positive, you can say, hey, Shinzo Abe, he was loved by his people.
I would say
And so
the
that's a
positivity
positive
here,
thing.
and I didn't know which story you were about to read, so I was going to try to be funny, but I'm changing past
Yeah.
not being funny. The positive here, as negative as that is, it really sometimes takes great loss to appreciate great gain. So the positive on this one is, man, there's nothing ever good about loss of life, but walk away from this with an appreciation for life, for an appreciation for everyone who is in your life. Reach out to someone today you have not talked to in a while
right.
that you love. Let them know how much you care for them. And then positivity, I'm going to be praying for justice in Japan.
Yeah,
So-
absolutely. And it seems like they've caught the fella who's done it, which is good because justice is a godly thing, and may justice be done to the man who did that. That is a very sad, terrible thing that happened. If anybody here is from Japan or lives in Japan, Kelly's wife is actually from Japan, so this is probably affecting her on some level. Our hearts go out to you, and we will be praying for the nation of Japan. Nevertheless, we're going to jump into our TA notes here, and we actually have an article that will kick it off. Bitcoin bear cross raises outlook for bull revival. We're going to start our technical analysis today by looking at a broad overview of the cryptocurrency market. So we're going to jump onto my chart here. Before we get started with our TA, though, I do just want to remind you guys that this show is brought to you by you guys. It's brought to you by you guys who support this channel by subscribing and by hitting that like button, hitting the post notification bell, following us on all of our social media, tuning in every single day, and we're so very thankful for you guys. So make sure, if you haven't already, if you have the ability to do so and you feel that you would like to, hit that like button. Let's see, we've got currently 117 likes, 620 people watching. I know we can get that like button a lot higher, so go ahead and smash the like button, subscribe to the channel, hit the post notification bell. But over here on CoinDesk, Bitcoin bear cross raises outlook for bullish revival. A bearish but historically contrary indicator suggests an end to the market decline and a bullish revival ahead. This is talking about the 100 SMA crossing below the 200 SMA on the 3 daily chart. So let's go ahead and take a look at that on some TA. We're going to start on the 3 daily chart, and then we will jump down and do some shorter term TA down on the hourly and 4 hourly and daily chart here as well. The first thing I want to show you guys is that we're in a pretty substantial downtrend. We're in a pretty substantial bear market. We've been under a confirmed sell signal now for quite some time on the 3 hourly chart. Lux Algo called this entire downtrend back over here when we had a confirmed sell signal here on the 25th of April, led to a 46% downtrend. Lux Algo called this phenomenally. We've been in a pretty massive bear market ever since November the 10th. It got confirmed, I would argue, back over here in very early May. That's when we confirmed it. So just laying the foundation, we are in a bear market. And we are in the third major bear market in the history of Bitcoin right now. And those are events that happen about once every 4 years. And it's been about 4 years since we've had a bear market, so it stands to reason that we would be witnessing one right now. Bitcoin is about 13 and a half years old. Every 4 years, there's been 3 bear markets. It makes sense. So the 3 bear markets that we have seen are the one that we saw here in 2014, 2015, and then here in 2018 that led into 2019. But there are some similarities that we can draw between all 3 of these. The similarity that the article is drawing is between the 100 simple moving average on the 3 daily chart and the 200 simple moving average on the 3 daily chart. There have only been 5 crosses of these moving averages in history. I'm going to go ahead and show you with red lines, the red crosses, and there's a red cross coming right now. And then I'm going to show you in blue, I will go ahead and change these colors here in just a second, the bullish crosses. So let me go ahead and change the color here to a blue just to represent bullish. That's how I normally color my charts here, is that I represent bullish and support, if you will, with blue. Resistance with red. So the red lines here represent bearish crosses that we have witnessed on these moving averages. The blue right here represents bullish crosses, where the 100 crosses above the 200. You can see when we saw a blue cross right here, we rallied 4,877% to the top of the bull market. Here we rallied 1,000% to the top of the bull market. But so before I get to the but, if we look at these crosses, we can see the bullish crosses here are actually quite bullish, and that's a very important signal. But if we look at the red crosses here, and we take a look at the bottom, we can see that the red cross happened here on about Valentine's Day 2015. You could call it February 12th would actually be the day of the candle. The bottom for this bear market was actually a full month earlier here on the 3 daily chart on the 13th of January. So when we saw the cross, we were actually already a month past the absolute bottom. In the case of the bullish crosses, we still have over a year to go of bullish movement to the upside to continue the trend that it's calling for. These moving averages call for a bottom. That's very important. Moving forward here, if we look at the cross that we saw here on the 24th of December, 25th of December, around Christmas 2018, you can see the bottom, the absolute bottom of that bear market was actually in 10 days earlier. So interestingly enough, if we look at where this cross is coming in, it'll be coming in during the next 3 daily candlestick. Then we're going to see that happen here on the daily open of the 9th of July, maybe the 12th of July, but probably the 9th of July. The bottom that we witnessed on the 18th of June is about a month earlier. So this candlestick pattern would actually suggest that the bottom for Bitcoin could already be in. And when I discussed with Michael Vandepope over on Market Talks on Cointelegraph yesterday, he was actually under the impression as well that the bottom for Bitcoin, if not being in, was very, very, very close and may not even be as low as $14,000, because what he was saying, and this is a compelling argument that I'd love to discuss with you, Tim, is that the only reason we went down to $20,000 in the first place, the only reason we dropped below the 200 weekly simple moving average, which we typically hold, you can see in 2015, we typically hold the 200 weekly simple moving average. That's this red line right here. We hold it right here. We held it right here. The only reason that Bitcoin found the strength to go below the 200 weekly simple moving average, which is only at $22,700, is only $1,100 above where we are. The only reason we had the strength to do that was because Terra Luna crashed and wiped out $60 billion in valuation. You saw 3AC go under. You saw Celsius shut down transactions. You saw Contagion come in and knock out all kinds of players. Voyager going under. Bunch of companies going bankrupt and getting liquidated. Vald was another one. And that is the event that led to this drop. If you think about these companies as being in a long position because they're betting on leverage that the market's going to go to the upside, well, essentially what happened is that all of them got liquidated and their stop losses got called. And so they dropped a ton of money on the market. So everybody that lost Terra fled scared, and the companies that were invested in Terra, and then they couldn't pay back their customers, they got liquidated, and that dropped us down to $17,800 through a black swan event that never should have happened in the first place. The only time in history that we've ever dropped below the 200 weekly simple moving average was back here in March 9th of 2020, and you guessed it, that only happened because of a black swan event similar to what we saw happen with Terra Luna. So, my question to you, Tim, since in history, these two moving averages typically cross after the absolute bottom is in, and we saw a bottom at $17,400 about a month ago, could that indicate that the bottom actually is already in, especially considering what Michael Vandepope said on our stream yesterday?
So today's Positive Friday.
Today's Positive Friday.
So I want to start off by saying that is positive news.
That is positive news.
I'm going to get a little negative and then spin it back positive.
Tim!
I have to, because you know what's negative is not telling people what they need to be looking at and keeping in the back of their mind when they're making investment opportunities.
That's true. That's not
so.
positive.
This is positive, even though it's negative. I have a couple issues, and I'm not saying this is guaranteed, but these are some issues that I do want to express. What you just showed us was beautiful, but there was only 2 situations we've seen like that in the past. So we've only actually had 2 scenarios, in which case we've had an opportunity to look at when the 100 and 200 3-daily SMAs are crossing each other. Just because we've seen it happen twice does not mean it absolutely has to happen a third time. Absolutely it could. So I'm not saying that I'm going to say factually it's impossible for it to happen again. It's just at the same time, Jebb, how many other things have we looked at that have happened once, twice, sometimes even 3 times in the past, and then that ends up getting broken? We also know this market is very different than previous markets. First of all, the bull market, statistically, the way previous bull markets have worked, did not get as high as we thought it would go. Why did our channel and a lot of other YouTube channels call for a $100,000 Bitcoin price? Because if you just followed the past and you followed the statistics and you followed the numbers, it was calling for above $100,000 of Bitcoin. But we didn't get there. The bull market didn't act the way previous bull markets completely acted. So why should we be under this assumption that the bear market's going to act just like every other bear market? And I still have concerns about some fundamentals in the news. Bitcoin has never been through a recession before. So when are we going to look at that? We're probably heading into a recession. We're going to talk about that here a little bit in the show. That's what we're going to be talking about probably for the next couple of months. Bitcoin's never been in one before. So I think there's going to be precedences and things set here in the next year that will help us impact the future. But I do believe we're a little bit walking into this situation blind. That being said, though, I do think that is some hope on the market. Absolutely, Bitcoin does not have to go back down to 17,000. The bottom absolutely could be in. Some fundamentals could change. But as it stands right now, I don't think that I think Bitcoin is old enough and has enough experience for us to have some confidence that Bitcoin is going to make it through this bear market. What I don't think we have enough history and information on is to say exactly where we think the bottom is, and to say that it's already in. I believe it's a little too premature to make that call.
Yeah, absolutely, and I think it's important to realize that we're never going to be able to call the exact bottom, but what we can do is that we can dollar cost average. And that's one of the things that we promote quite a lot on this channel, is that whether or not Bitcoin's bottom was in at $17,400, we have very strong reason to believe that the bottom for Bitcoin is very close through a multitude of factors, not just from the cross on these moving averages on the 3-daily chart, not just from the fact that this entire drop happened as a result of a massive liquidation event that triggered $100 billion in destruction in the space, which led on to knock-on effects of the market dropping and erased another several $100 billion of valuation at the same time. The thing I want to keep in mind is that what happens in the next couple of weeks as we get more information about inflation, as we get more information about GDP growth, or actually in this case more than likely decline, as we get more information about the Federal Reserve raising rates, this is going to give us a much clearer picture of where Bitcoin is going, because the dust has settled on a lot of what was going on with contagion. A lot of these companies that were getting knocked out have been knocked out. A lot of the effects that have been felt a lot of the effects that are going to be felt have been felt. I'm not saying it's over, to be clear, but this is the kind of thing that happens ridiculously quickly, and that's why we saw every single day, it seemed like, okay, Celsius, Vald, we saw Three Arrows Capital, Voyager, all these different organizations going under or going through a massive constraint. Nexo trying to buy different companies. There was so much going on here. It happens very quickly. So I think now we're going to start looking back towards not just contagion, but also back towards those traditional markets and those traditional metrics. And that's going to bring us into what we talk about here at the first part of the discussion, where we talk about unemployment. But the point is that how these numbers come out in the next couple of weeks is going to dictate a lot. I do believe it's on the 13th, which is next Wednesday, we're going to be getting inflation data. And if that comes down, if that comes back anything at 8.6%, which is what it was reported as last month, or lower, that's going to have a big impact on the Federal Reserve's policy of raising interest rates. What we see happen with the job creation, which is seemingly positive right now anyway, now there's a debate there, is going to have an impact on the raising of rates. And then, of course, how much the Federal Reserve raises rates is going to have a big impact on the Bitcoin and cryptocurrency markets. Because, again, like I said yesterday, what the Federal Reserve is trying to do is they're trying to clean up the mess that they created and that the regulators and governments of the world created 2 years ago when they completely shut down the economy. They're trying to clean up the damage of having 33% of GDP wiped out in 3 months. That's ridiculous. That's 11% a month gone. That's $2 trillion, $2.5 trillion of GDP gone every 30 days for a period of 3 months. That's what we saw happen because we shut down the economy. And so now we're trying to claw our way back and fix that. And so the Federal Reserve is trying to fix all of the inflation that they caused when they printed $4, $5, $6 trillion. But the problem is, while they're trying to fix this, another recession is going on because when you printed so much money, the next boom cycle is going to be much shorter because eventually that's going to catch up with you. And so now we're seeing the effects of that rampant inflation. We're seeing the effects on the average consumer. We're seeing the effects on Main Street. We're seeing the effects on average prices of goods. We're seeing the effects on gas. As far as gasoline, we're seeing the impact on energy, on the energy sector, on rent, on all kinds of basic living necessities. So now they're trying to raise rates. The problem is they can only raise rates for so long because a recession is coming again, and we're almost certain of that. And then even though we've made more jobs, that doesn't mean the sentiment of the job market has gotten any better. So that's a huge concern that they're looking at. There is a perfect storm going on in the world right now, and there's going to be a giant crash at some point. It probably won't be this year, to be honest with you. They may be able to kick the can even further down the road, but we're going to have another 08 style event. To be honest with you, we're probably going to have another 1929 style event at some point in the next decade, and that's going to be because of irresponsible policy that the Fed has been implementing for 60 or 70 years with trying to manipulate the supply of the currency so that they can make whatever it is that they want to happen today at the expense of tomorrow. And that all has an impact on Bitcoin. What impact? Well, the impact is that depending on which direction the Federal Reserve goes, raising interest rates or not raising interest rates is going to have a big impact on Bitcoin. If they decide not to raise interest rates and then start QE, quantitative easing, money printing again in the next 6 months, you're going to see an injection of liquidity into the Bitcoin market like you saw in mid to late 2020, and you're going to see a major rally. If you don't see that and you see interest rates continue to rise, then you're going to see Bitcoin stay suppressed through the summer, moving on into the fall. But the point is, eventually, the Federal Reserve will start printing money again because that's how they work. They print their way out of a hole, and then when they do that, these different companies are going to get injections of liquidity because they'll drop interest rates and they can borrow money and buy Bitcoin on leverage, and that'll leave the price going up. All of that to say, whether the bottom is in today or the bottom is in 6 months, the bottom is very close. And we've dropped almost 80%. We have a lot of confidence from the technical history of Bitcoin and also from the fundamental landscape of our regulatory governing bodies and the way that our currency is, well, controlled, I would more likely say manipulated, to tell us that there is a rally coming at some point soon. But Tim, I would love to hear your thoughts on all of this and on the short-term technicals as well.
I would say, I think you kind of summed up the long-term there, and it is good to know that there are signs and things to look for. And you always want to take all the information you can into consideration. The whole point of educating yourself is not that every single word or every single opinion you ever hear is the actual thing you're going to operate on. But the more information you have to make a decision, like if I had this person's opinion, and this person's opinion, and this person's opinion, and I'm looking at this data and this data and this data, I don't have to follow each one individually. I can utilize them together to create a wealth of knowledge, to make my opinion, to create my decision, and to control and have my own financial sovereignty. That's the whole point. But let's look at some short term, because it's Positive Friday. So let's look at some positive things on the charts. Down at the hourly charts. Man, I don't know if you're already on my screen, but let's go ahead and do there. I already have my VPVR pulled up, and I don't know, Jebb, if you saw this morning, but there is a case that we could get down to about 20,296. There's another strong level down there. But right now, we are currently working with a strong level of support, and we actually have bounced off. I have it skinny, but there's a green candle right there. I scrolled so you guys can see the information as long as we've been down here. We are sitting right at a current level of support. So if we can hold this, which it does look like we are currently doing, there's a strong reason to say that potentially we could rally from here. So that's positive right there. Let's look at some other things here on the same hourly chart. First of all, you guys are going to notice one of my favorite indicators on all of technical analysis is the RSI, and looking for divergences. Well, boom, sausage. We have one forming right here where the price is clearly going to the up. We have a higher low, but the RSI has come down very nicely to set up that bullish. This is hidden bullish RSI divergence, which means it's a continuation pattern to the upside. Boom, that's sitting on the hourly chart. That is super positive. Also on the hourly chart, before I go too far, TD sequential, if I pull up TD sequential and Bollinger Bands, I don't need my RSI anymore. You're going to see a nice little green flash right there, reversing back to the upside on our TD sequential. We're at the bottom of a constricting Bollinger Bands, which means that we should see some explosive movement soon. I know yesterday I told you guys to be careful, to wait for some confirmation before you enter into a trade. And guess what? I think we're starting to see some confirmation, Jebb, that potentially could send us upwards of closer to $25,000 before we have resistance. The other reason why I believe that, looking just at the volume on this hourly chart, look at this uptick in volume. And I'm going to pause right there. Remember, I'm learning more about volume as we go. But as we stand right now, we know that volume comes in for one of two reasons, because it's about trading. There's money coming to space. People are either investing or they're taking out, they're selling, they're buying. These two histograms right here on the hourly chart are confirmation upside histogram bars. Notice the volume drops back immediately. We do not have resistance volume coming into space yet. We do not have volume coming into space saying it's time to reverse the trend. Yes, we came back down, kind of caught our breath, but as you guys see, we're kind of just mounting up for another rally. We do not have high volume saying it's time to reverse, meaning that there's a lot of bears now trying to sell. If anything, the volume at the moment is speaking this rally should be continuing. Even better though, let's go up to the 4-hourly chart, staying on these smaller time frames, and let's pull up our Lux Algo. You guys know we love us some Lux Algo, and if you do not have it, you're going to want to have it. Yesterday, we had entered take profit. Like if I were to back this up, actually, I'm going to do it for you guys really quickly. Let's go back over here and see what the market was looking like. So I can take my T. I don't know why I still have my Bollinger Band TD sequential on. We don't need that right now on the 4-hourly chart. But look at this right here. Take profit on Lux Algo, we had hit it already. We hit that lower band at 20,000. However, when I push play and these candles develop on the 4-hourly chart, watch it reassess. It just jumped up, and now we're looking at potentially getting at the lower end 23,700, and at the top end maybe upwards of over $25,000 for resistance. This kind of fits with what we've been talking about now for a couple of weeks, that there has been this really boring mood in Bitcoin, and that the bulls had kind of been in reserve. This positive. The price looks like it is going to continue to go up. The charts are showing it. There is no strong, immediate bearish news that should force it back down. But this is that kind of rally we were talking about, that fake out where we kind of start to get retail investors getting a little bit of hopium, getting a little FOMO. They're going to start buying in, thinking, oh no, the bottom is in. The bottom is in. It's time to rally again. I'm still saying watch these levels, but let's stay positive. Positive, I think Bitcoin is going to go up over the next week or so. Positive, great time to take some profit and wait for a lower price. Positive, this is the season you're going to continue to make money, and the charts are going to help you do that. Lux Algo is going to help you do that. I heavily recommend it, but I'm not ready necessarily to call this the bear market over just yet.
No, absolutely. But the one good thing about Bitcoin rallying, as you said it could do, is that if it does that, I'll show that on my chart, we would be getting above the 200 weekly simple moving average, which currently sits at $22,700, and that would likely give a lot of power and strength to the bullish argument that the bottom is close and is in, and you would probably see a lot of the bulls start to go into longs, and a lot of the short positions start to hit stop losses because they would think, okay, out on the weekly chart, I was short, we thought we were going to go lower, maybe we're not moving to the downside as much. So I honestly think that if you saw Bitcoin rally up to $24,000, $25,000, then you can see that happen very quickly, because VPVR shows us that there's not much in the way of support or resistance in that region. I mean, there just isn't much there at all the way up to $27,000. So you could see a pretty quick rally up to that if it were to occur. I do have questions about where you would get the strength to embark on that rally, but breaking above the 200 weekly and moving average may be one of the places that you would find that. But let's go ahead and jump into some super chats, and then we have a very special discussion coming up.
We do. We actually have a good amount of super chats today. So first of all, I love how Jason gave a super chat starting off just by letting. I don't think he understood the part of the game. The whole point is that I butcher names, but at the start of it, he's correcting me. So he says at TA Tim, it's pronounced without the E, Lang. So Jason Lang. Anyway, he said, anyway, leaving for family vacay tonight, and the wife agreed to a 1-hour max time limit for crypto per day. Told her that's all I need for crypto, Jebb.
Oh my gosh.
Come on, Jason Lang.
Oh, well, we're
love it.
Thankful that you chose to spend that time with us. Thank you.
What a positive message.
That is a very positive message. Yeah. Good job. In the spirit of Positive Fridays.
Nico Wild said $1,416, $1,416 my ETH prediction for the next local high. By the way, thoughts on cup and handle on the short time frame leading into the W for coin on bigger time frame to $74.
Yeah, I haven't done any technical analysis on Coinbase recently, but because I don't really trade Coinbase, but it is to be honest with you, Coinbase chart looks pretty terrible. It's in a massive descending triangle pattern right now, pointing to the downside. And obviously, Coinbase is down substantially from when it went IPO last year. And yeah, I'm not too thrilled about its chart, but I do think that if you bought Coinbase, that is, down on these lows during this bear market, you're probably going to do pretty well, as Coinbase moves quite a lot with the market, and Coinbase is probably about at the bottom of its movement, as I think Bitcoin is about at the bottom of its. So definitely a good look there.
Crypto Alchemist, who's now been a member as a Jebbi Knight for 10 months. So shout out to him, first of all. Said, thank you for giving me the chance to place a prayer request on your wall. Your prayers have been heard, and I've made great strides towards what I'm trying to accomplish for the autism community in my town.
That's awesome.
Love you guys. Thank you so much. Again, in case you guys are wondering what he's talking about, we announced this on Monday. We'll probably every Monday talk about this, just to remind you guys. In our office, one of the ways we want to minister and be just really caring and loving on you guys is we have a prayer wall where if you email our support@cryptojebb.com team, we're going to be writing your prayers on those walls. One of our team members is going to be able to take that prayer and pray over you guys all week. Even if you're not a religious person, even if you don't believe in Jesus, you don't believe in the Bible the way we do, that is okay. If you just want someone to be thinking about you, please reach out to us. We love you guys. We want to be there for you. Physically, spiritually, emotionally, everything at the best of our ability. So
absolutely.
Last one from Nico Wild that I see here. He said, everyone that held crypto knew what near market meant. Correlation between more people anticipating low bottom and even shorter bear markets.
Yeah. No, I think that yeah, that's kind of what I was getting at when I was talking about the bottom in Bitcoin has a lot to do with the sentiment. After you have the market drop so low, like if you did see it drop down to $9,000, $10,000, $14,000, you would see the vast majority of people think, okay, well, the bottom's in, so I guess I can go ahead and buy Bitcoin, because they will think, okay, well, it's only going to be uphill from here. So the sentiment is extremely, extremely important. And like you said, the correlation between people anticipating a low bottom and even shorter bear markets, as people are anticipating that the bottom is either close or that the bottom has actually come in, then you're probably going to see a shorter bear market if it moves very quickly. And one of the great things about this bear market, keeping it positive for Positive Fridays, is that this bear market has moved relatively quickly. We have dropped all the way down from $69,000 on November 10th, all the way down to our local low of $17,600 in just 219 days, 75% to the downside. So we saw that movement happen very, very, very fast. And I do think a lot of people are starting to think, okay, either the bottom's in or the bottom is ridiculously close. And a lot of the institutions are probably going to be jumping in the next few months, even if they're jumping in to short the market to drop it down to one last low. I think you're going to see a lot of smart money getting in. You even still see Michael Saylor getting in. He just bought another 480 Bitcoin. So you're continuing to see the smart money and the big money, the powerful money, the whales, continue to get into Bitcoin. But guys, we have a very exciting discussion coming up. But before we jump into that, we need to answer a common question that we get from our audience, and that's this. Why would you want to use GetHedge when you can set up recurring buys through Coinbase or a similar platform? Well, I'll start by giving you 3 reasons. Number 1, transaction fees. When you're using Coinbase, you're essentially getting hit 3 times in fees. The initial purchase, the spread or the slippage of the market, along with the fee to move it to another wallet. With GetHedge, you pay 1.5%, no matter if your funds are stored on their platform or if you send to your own wallets. Number 2, the other reason is security. Your funds are coming directly from your pay source and they're going straight to your wallet. Hedge does not hold custody of any of your cryptocurrency, so you can be sure that there is plenty of security there. And the third reason is that it bypasses your personal bank account. Even with the widespread adoption that we've seen in the last year or so, there are still so many banks that are not crypto friendly. Hedge eliminates the possibility of your bank freezing funds or rejecting a transaction. As we've seen as of late, exchanges can be a very risky place to store your crypto. At GetHedge, they believe in their users having full control of their assets. Change your allocations whenever you'd like to a multitude of different cryptocurrencies that you can invest in using GetHedge. Make sure that you sign up using the link in the description box down below, because they also believe in your crypto, your keys, your crypto, and moving it into your own wallets. That's why they don't even give you the ability to custody it with them. As we've talked about, the power of automating your recurring purchases is extremely powerful, because whenever you automate your purchases to a Bitcoin and other cryptocurrencies, then it comes out of your account before you ever see it, so you don't even budget using your US dollars in the way that you would if you were not already putting it into a recurring purchase. So that's why we love dollar cost averaging. Pay yourself first so that you can find your investments growing in the long run. That is why you should get Hedge. Use the link in the description box down below. But we have a very, as I said, exciting discussion coming up with a very exciting guest, none other than, drum roll please, boom, Crypto Vet. How are you doing, Harry? Welcome to
Man,
the
I'm
channel.
doing absolutely awesome. How are you guys doing today? It's a
Doing-
little early here on the West Coast.
I was just saying,
but
yeah.
Yes.
I'm glad.
I had a meeting with Harry yesterday. Harry was in Texas, but like literally we met with him, and then you had another meeting, and then you had to fly to the airport to go out to LA.
Yeah.
So it is, I think we were talking with you this morning at like 6 o'clock in the morning your
Oh
time.
my gosh.
It's
Yeah, you were
7:30
my
here.
alarm, so it was absolutely perfect.
Wait, you said that we were your alarm? Is that what you said?
Nice. Nice.
Gosh.
Yeah.
Well,
So
hopefully you're-
lots of fun things happening here. So super excited to be here and always glad to be on the show. I don't care if it's 4 a.m. I will be here.
Come on.
well, we really appreciate that, Harry. You got a lot going on, and we're really excited to talk about all of that. But even before we jump into that, we need to talk a little bit about what's going on in the traditional markets. And we want to talk a little bit about the payroll numbers that just came out. So let me introduce this article, and then let's discuss. Over here on my screen on CNBC, you can see payrolls increased 372,000 in June, more than expected, which is a tumultuous statement, as job market continues to defy recession fears. Non-farm payrolls in June increased by 372,000, topping the 250,000 estimate. The unemployment rate remained at 3.6%. Average hourly earnings increased 5.1% from a year ago, a touch faster than estimates. That might seem like a good thing, but considering inflation is at 8.6%, that means that average hourly earnings are not keeping up with reported inflation, which in my opinion is a manipulated statistic, which is much lower than it really should be. So people are falling behind inflation, meaning that it's getting more expensive to live. So moving up 5.1% seems like a great thing. It's not. It's actually a pretty bad thing, to be quite honest with you. There's inflation going on, and much of the money that is being taken out of the economy is not going right back into jobs and into payroll, and that is unfortunate. By sector, education and health services led job creation with 96,000 hires. Professional and business services added 74,000 positions. Other contributors included leisure and hospitality at 67,000, healthcare at 57,000, transportation and warehousing at 36,000. So the payroll estimates came in at 372,000, which means that new jobs are being added. But Dow Jones estimated 250,000, which seemingly means that we're ahead. But we talked to Malachi, one of our analysts here on the team today, and he said that Dow Jones had come out and revised their estimation of new payroll for this month 4 times, moving it down every single time so that when it did come out, it would look better. So the jobs estimation was actually much higher originally, but of course Dow Jones wants it to look like payroll is doing very well so that people will go and invest in the Dow Jones Industrial Average and other products that they offer. Harry, what are your thoughts about the unemployment rate and the fact that we've just added 372,000 new jobs despite all of the turmoil in our economy right now?
Yeah, I mean, it's a very, very good question. And when we think about where our economy is at right now, we follow the Fed, and we were hoping that they have our best interests in heart, right? But when we hear what they have to say, it's completely the opposite of what the data is showing. Like you were saying before, Jebb, we're looking at all this, but they say, oh, it's going to be fine. We're going to, tighten down. We're going to be a little hawkish. We're going to go 0.75. And, based off their projections, we're going to try to get down back to 2 by 2023. Very, very unlikely, right? How is that going to happen? We have basically 2 tools with monetary policy. We can quantitatively ease, or we can tighten down and affect rates, right? To hopefully bring that down. But by doing so, we're going to increase unemployment, and we're going to have opposite effects. So we're playing this balancing game, and they're not doing a very good job. Then if you follow the data they have says one other thing's going to happen, yet Jerome Powell says one other thing. So to kind of bring this down, we see that we have really, really high inflation and we have high unemployment. This kind of goes to, we have low GDP, like you were saying, our economy got shut down. So what does this mean? This kind of means what we were talking about many months ago. We're hitting a recession. And in this case, we can maybe even say stagflation, right? Because we have a sense of stagnation. Our economy is like, bleh, we're not really doing anything. We've had all this money pumped in. And now as we're going into inflation, what do we feel in inflation? On the acute side, we feel it in oil and for food. And we're definitely feeling that right now. Yep. So, how do we get out of this and what's going to happen? I really don't think that it's going to be a good outlook coming into the future here. And like we said with Bitcoin hasn't seen a recession like this. As we follow the models, oversold, it looks like we're probably at a bottom. So I honestly feel like something unexpected is going to happen as we start to have more and more downturn here with our economy, right? More unemployment is going to happen. We're seeing a lot of, protests, not just in the U.S., but overseas in the Netherlands with farmers. I mean, like you said, you had Michael Van de Pomp on, and he was explaining that on our Twitter space with Kelly. So right now, just overall, and I kind of want to send this back to you, like, what do you think on stagflation? Do you think that this is a thing? Because I haven't heard it much since it was brought up several months ago as a recession is coming through. So, as I think and look at this, I don't see us getting more jobs, right? We don't have any increase here in the future. So what's the good news that we have looking for, right? So it's kind of, where does the narrative go from here? We just kind of have to see.
The concern right now, Harry, is that we've seen GDP grow negative 1.6%, I want to say it was in quarter one, and we're expecting about negative 2% at this point. And we saw positive GDP growth of ridiculous numbers quarter over quarter. We reported on this a couple weeks ago of, 5, 6, 7, 8, 9%. In the quarters of 2021. And the reason that that's such a problem, and you're talking about stagflation, this ties in perfectly, is that you see the economy growing, but you also see the currency inflating. Like you talked about with oil, food, and also add in, rent, add in the fact that people are not getting paid as much as they were before, even though their wages are going up, but because of inflation, it's not actually making a difference. What you have is an artificially growing economy. You have an economy that's growing nominally, but you don't have an economy that's growing realistically. You have an economy that's growing because the number's going up, but the problem is the number that you are basing it off of is being manipulated. We have 8.6% reported inflation. I would argue that it's more like 30. That's what Michael Saylor argues in a lot of his interviews, and then he argued on this channel. He said, no, inflation is not 8.1%. It's not 7.6%. It's not 8.6%. You don't double the money supply in 2 years and expect 8% inflation. It's ridiculous. So I agree with you. That's what you're talking about with stagflation here, is that the economy is theoretically growing, but it's really not. If you were to use January 1st, 2020's US dollar and then look at GDP growth, I would be surprised if you were able to actually tell what the inflation was, not manipulated CPI data. I would be surprised if we've had a single quarter of GDP growth at all ever since the beginning of the pandemic, because we've seen so much manipulation of the currency and so much manipulation of the economy. So I'd love to hear your thoughts on that as well. And tell us a little bit about what you're talking about with stagflation here, and like define that for us. What does that mean? And what are you seeing in the data right now that's leading you to believe that that's where we are?
Yeah, it's an absolutely great question. So the stagflation is actually putting two things together. It's stagnation, which is just high unemployment, and our GDP is just really not that good, right? Which we had from the pandemic is making this happen, right? And then the inflation part of the stagflation is just the inflation that we're seeing, right? We printed trillions of dollars, exactly like you said. I mean, let's just do simple math. You have 1 million and you double it, you've just halved it, the value, because you've doubled the supply. Simple math. Now, if you think 8% is what happens when you absolutely quadruple or do whatever the hell we did with the money. No, that's not what happens. So Michael Saylor onto something here, right? So that inflation is through the roof. So stagflation together is something that we, when I was reading about it, 6 months ago, they said something about England and how they actually didn't think this would actually be able to happen, right? But when you think about how the Fed controls monetary policy and money, they control the supply. So they can control what happens on multiple different layers. And now by doing this, each slider you pull up, something has to come down. And this is what we're seeing with the unemployment going down, unemployment going up, GDP is going down, and inflation is going up. And like Jebb just saying, you can't afford, even though, hey, man, I'm making more money, look at all this, but well, hell, it costs $8 now for a gallon of gas, and people are sitting in traffic for 2 hours, right? So now it takes 3 times as much money just to commute. So now where does this money get made up from, right? So, we're going to go through some sort of restructuring here in the recession, right? This is where the people have to figure out how they can survive with what they've got, and the ones that you got to trim the fat somewhere, right? So overall with stagflation, it's kind of going into a recession, and this is where you have to sit through and just kind of ride it out, and then we'll go from there. And this is where I hope this restructuring is where Bitcoin and crypto takes over, and we won't have to deal with this monetary policy bullshit further on, right? Nobody can inflate the supply of Bitcoin.
And that's the problem with the inflation of the US dollar, is whenever you have massive inflation of the currency, the government grows bigger because you are silently taxing people. How evil and despicable, and I do mean those words, is it to steal 10, 20, 30% of somebody's money from them without ever even touching their savings? I explain to people like this: put $100,000 under your mattress and come back in 10 years and half of it's gone in a good decade. But where did it go? Well, it's not that it went anywhere. It's that if you double the money supply, then it's going to cut that in half. And actually, to be honest with you, it's even worse than that because of all of the impact that was had to the supply chain. The supply chain is still trying to resolve itself. There's still, as you talked about, issues with food. The amount... Ukraine exports somewhat, I forget the exact number, between 2 and 5% of global calories, mostly to North Africa and the Middle East. They have one port that they export 95% of their grain and their sunflower oil and all of their exports through. It's called Odessa. It's surrounded in mines and blockaded by the Russians right now. You're about to see a famine happen in North Africa and in Syria and in parts of the Middle East that they export to, and you're going to see all of those countries under extreme toil, and there's probably going to be a lot of migration going on to multiple different places, which is going to upset the balance of power even more. That's just one example of what's going on the geopolitical stage. The point I want to make, though, however, is that whenever you see the currency get massively inflated in the way that we have, you steal silently the value of the wealth of the populace. And where does it go? Well, it goes right into the hands of whoever's printing the money, because they're the ones that have the control over it. So you make the government bigger, you make the individual smaller, and you build this centralized state, and you continue to make people more reliant on it. Because like you said, there's a restructuring going on. People are going to have to figure out how to live on less, which means that people are going to sell their homes at a loss because the real estate market is probably about to go through a lot of trouble. They're going to have to, start working from home in a much bigger way. That's going to change things a lot for company culture in many different organizations. They're going to start having to dine out less, which is going to hurt the GDP. And it grows the government. The government gets bigger, the economy gets smaller, the people hurt, the government gets more powerful, and then you run into this situation where people have to look somewhere else to preserve their wealth. And in the long run, this is a very subtle but remarkably powerful force. In the long run, it drives people towards Bitcoin.
That's the hope, because if we can get people to a decentralized state, and it's kind of a hard jump at first. And one of the big things I battle with, advising anybody and getting into the crypto space is it's jumping the barrier from going to fiat to crypto. Yep. You have to go past the technical barrier of now, okay, I don't just swipe my card. I have to now understand this. I have to send to this. And, just getting a MetaMask set up can be difficult, right? Like my mom's not going to be able to do that, so it would have to be a process, and she'd have to really want to learn for her to actually, do this. So like you said, it's a slow grind, but if we can start showing people the freedom, that you can have financial sovereignty here by, being in charge of your own finances, that's kind of what we're striving for, right? And I mean, that's why I'm here in LA. Is the NFT3 Awards is coming up on August 5th to the 7th. I'm here to not only speak, but I'm also help booking talent for the 3-day festival. So, we're trying to help the space as much as we can by doing everything we can. And, looking at what is going to be coming in the future, where, like you said, people are going to have to figure out what to do, pay their bills and do all this, that's not what we want as a country. But in the end, as we switch to away from the need of suckling from thy teeth of thy government, we want to be in charge of ourselves and do that. And it's going to take some time. I mean, I said, we'll have to keep doing this, keep educating. And, we're going to, I'm hoping for the best. I like to be half full versus half empty.
Yeah, no, I totally agree with that.
Yeah, no, I wanted to tune in here for just saying, because I think what Jebb and Harry were just talking about was a great take on reality, right? So reality, we are watching the job market get very scary. In reality, we're watching inflation and everything get very scary. There's a difference, though, between reality and what the federal government wants to admit. So for a second, as we wrap this up, let's forget reality for a second and think about data.
Okay, we're starting to sound like Keynesian economics.
I like numbers.
But I mean, Positive Friday. Let's walk away with some positivity, because the reality is at times very scary looking. The positivity is Harry is 100% right that the unemployment rate is going up. However, the data does not show that. The numbers that are coming out that we are going to be making decisions based off of, not we as in this team and Harry, we as in the United States federal government and Jerome Powell, is actually not that bad. And so there's something that's really interesting. Go to my chart really quickly here, Smay, is that this is that CME report, that futures report on what we think the next hike rate is going to be here in, I believe, 2 weeks? We're going to get another hike rate?
2 weeks and 2 days or something like that.
All right, so this is up to
5
date.
days.
This is active. So based off of the unemployment rate, which is, again, we've talked to you guys about on the show before, is probably one of the biggest factors of what the Fed is going to do, because that is his number one concern, is as he's looking at a recession, but he's also looking at heavy inflation, his deciding point is unemployment rate. So right now, the CME futures are actually predicting with 97% predictions a 50 basis point hike. Why is that? Because currently we're sitting at 1.75, and this prediction right here, this 97%, is calling for it at the end of this to be a 2.25. There is 2.8% predicting there's going to be a 75 basis point hike again. But as it stands right now, there's actually information that maybe that the Fed is going to go down to 0.5. The unemployment is looking good. What we need to wait for next week, Jebb and Harry, is we need to look at what the reports are coming up from the CPI data. Yeah. Does it stay at 8.6? Does it drop down to 8.5? Does it only make it to 8.7? Because that is going to be another huge indicator. Because like we've talked about on the show, Jerome's sitting in between a rock and a hard place. What does my rule book say when I'm in a recession? Well, when I'm in a recession, what we should do is lower the interest rate. What does my thing say when we have high inflation? Raise the interest rate. Well, guess what? We have both of those going on, and that's
shit. What do I do?
Yeah, no. Oh gosh, it's almost like my system doesn't work, and I should probably throw it out and get this thing called Bitcoin.
So the positivity that I want people to walk away with is when we're looking at these data points, this is actually going to lead towards a small pump in the market in Bitcoin, because it could cause Jerome Powell to be a little more dovish than hawkish if we have some good information coming here. So is it reality? No, it's not reality. Does the recession that's coming on look really scary? Yes, it does. It does look really scary. But for Bitcoin holders, for crypto holders, there's actually potentially some positivity in this data, meaning that it might cause Jerome Powell not to be as hawkish as he has in the past. Of course, down the road, that's just kicking the can down the road. He might have to get more hawkish down later. We'll have to see as that plays out. But as it stands right now, what people do need to know is, hey, what do I do with this data that just came out? This data actually could be more considered bullish than bearish at this point.
Yeah, no, it actually could, and that's what we need to be paying attention to, is what is the Federal Reserve doing? What are they doing with their rates? And how are we going to see that mature over the next several months as this market continues to move? Now, Harry, I want to hear your opinion on what the next 6 months in crypto is going to look like before we start moving towards wrapping it out here. I think that the bottom could be as low as $14,000, but I've also heard arguments from Michael Van de Pope that the bottom may have been in, and the only reason that we're down here is because of the contagion and all of the liquidation of the different companies that occurred over the last couple of months following the Terra Luna fiasco. So I want to ask your opinion. Where do you think the bottom is in? Do you think it's close? And what does the path towards a new bull market look like?
That is a very good question, and it's something I've been pondering on for a while. I think the bottom is in, and the reason why is, and the bottom being in doesn't mean that we're going to go up tomorrow. We could sit here and trade sideways for the next 3 or 4 months, and that's what I think we're looking at. And with the bottom being in, though, we are going to chop and trade sideways. We need a bullish narrative to set this up for, like you said, how do we go forward? Now, there's a couple different bullish narratives. One of them isn't as bullish as I would like it. It's bullish in the acute in the short term. Again, it's kicking the can down the road. It's more quantitative easing, like you said. It's very dovish. They go in and they actually do more stimulus and they do more stuff. Look at California right now. Gavin Newsom is doing 1050 gas relief checks, right? Where the fuck is he getting? Where is he getting this money from, right? You know what I mean? Now, that's the scary part, because if they continue to do this, we're digging ourselves into a deeper hole. And like Jebb says, the fiat kings make themselves look good a little longer, making it harder for people to switch away from suckling at the IT to the government and going to decentralized Bitcoin, right? So to get out of where we're at now, it's going to be people, like I said, restructuring, finding the value in what they have. And if they lose the value in their home and they want to store the value somewhere, it may go back to precious metals, or gold, silver, and it may go to Bitcoin, right? I said during this restructuring, I think the next 3 to 6 months are going to be tough. I don't think we're going to have any really good price action one way or the other. We may drop to 17, go up to 23, 24, hit some of those EMAs. But in the end, the volume's really not there. Like you said, the contagion of all the Celsius and all of them being super over leveraged with each other. And, that's just kind of put the bearish narrative back in place. And I think we're kind of having to fall back into the 4-year cycle almost. And we're going to need to wait for the Bitcoin having the supply to be decreased, the difficulty to go up. And then we can maybe have the bullish narrative again. But in that case, we've got about 2 years, right? So in the short term, I think the bottom is in, but it took over 390 something days to go from the $3,000 back up to the 6 or 7 as it was going up from the 6 to 3 drop back in 2018, right? So it's going to be a slow ride in my opinion. I mean, you guys, I want to be the good news all the time, guys, but I want you guys to be prepared for the markets and what's in front of us, the data.
This is the deal.
We don't have anything.
This is the deal, Harry. It's okay to say bad news. We just got to keep it positive.
Gotta keep it positive.
Exactly.
So
I'm very happy. You see the smile?
Yeah. Oh man. Well, hey, as we wrap it out though,
go for
Harry. So we have your link tree down in our description. So if you guys are wondering where can I see more and hear more from Crypto Vet, aka Harry, there's a link tree down there. But I would love, there's a project that you are working on with your team. Harry, can you tell us in about 2 minutes what are you working on and how can people get involved with what you're doing?
Yeah, great. So the main project we're working on is, if you guys know from before, I'm really big in the NFTs. Dash League was our first NFT play to earn, and we have the beta out. And right now we're working on the tokenomics again because we're trying to make sure that this is actually good, because we won't even release the token if it's not going to actually work. Right? We're not going to take the money from that aspect. So but it's been very successful so far. And moving into that, we partnered with OneFluent, a large Canadian influencer agency, and we are doing a NFT project for all of their influencers, and it is in a sense a golden ticket to go to all of their events. It's a VIP access, and we have partnerships with some things as luxury listings, luxury exotics, so you can get to drive a Lambo if you have the NFT when you go to LA. You can stay at certain mansions, and there's tons and tons of other utility that's coming with it. But we are going to be slowly releasing details on how to get on that, because this is 100% community driven. There are no founder NFTs, nothing like that. Everything will be 100% tracked on the blockchain. If you guys have known me as long as I've been following Jebb, which is almost 4 or 5 years now, me and him have been trying our best to uphold integrity and honesty. We don't shill shit, we don't do any of that stuff, and we try to make everything as transparent for everybody. So that was my goal being in charge of this project, is 100% transparency, and then the utility and everything is based on the community. You get to pick everything, I don't pick it.
Yeah.
So that's if you're interested in that and want more info, you can just follow me. My link tree's there, or Pennyfly. I'll be here in LA doing more of the partnership deals. Currently I'll be at the Biltmore for the NFT 3 awards. If you guys are interested in that, I can always get probably some discount tickets for everybody who wants to go.
Come on.
So that's pretty much me in a nutshell right now. Lots of travel, lots of meetings.
Well, awesome. Well, you're out there grinding, Vet. I definitely want to encourage you in that. You got a lot of things going on right now, and may your travels be safe, and may the all of your dealings be profitable and good. Well,
I need to stop by in Florida.
Yeah, absolutely. We'd love to have you here in the studio. That would be awesome. Vet, it was Harry. Let me call you by your actual name. Harry, I really appreciate you coming on and sharing your wisdom and your insight on stagflation and your current opinion of the state of the market with us. Are there any final thoughts that you want to give us before we close out here?
No, I said everybody just have a good Friday. When the markets are down and everything looks shitty and rough, look at your loved ones. Remember, life is good, right?
Yeah.
Things can be bad, but it's your outlook and perspective that can change everything. So, in the end, this is just be good, and I'll see you guys in the next one.
Well, thank you so much, Harry. We appreciate you coming on. Love you, man. Take it easy. Wow.
Harry's one of my favorite people in the
That was
space.
great. Yeah, I agree.
He had some language slip up. It's early in the morning over there. He's doing the best he can to keep it there. But
sorry about
we
that.
love Harry. So, gosh, dude, I can't wait to spend more time with him.
Yeah, I'd love for him to come to office. That'd be great.
Yes.
That would be
I guess
awesome.
positive, it's affirmed, it's official. Bitcoin at 21,694. It was at 700 when the thing hit. I won the HODL trophy. So thank you to everyone who believed in me, who was Team Tim. There was a large a community of Team Smay this week. So sorry for you guys. I'm not going to say anything negative because it is Positive Friday. But maybe in the future, you should go Team Tim. This is 3 wins in the last 4 weeks. So it's, I don't want to sit on my high horse too much.
I just
so
want to
won't.
come over there and rip your head, rip your your hat. Your
That's
hat.
aggressive.
Your
I
hat.
want to rip your head off.
Your hat. I just want to rip your hat off and show people whether or not you have hair or not now.
I have good. It's Positive Friday.
That's why I don't want to rip your head off.
Whoa.
Whoa, he did
Whoa.
it!
I have hair.
He has
I
hair.
have hair. It's just a hat. I need a haircut. That's for sure.
I wasn't expecting that.
but I have hair.
It looks great.
Yeah, it
yeah.
looks great.
It is there. And guess what?
You look so weird without a hat
There will
on.
stay a debate. They'll stay a debate though because we only have 1,000 people watching right now. So we have a large community who is not watching, who will never know.
That's
they'll
true.
just have to trust your word for it.
That's
I guess
true.
it'll be they can go back and watch it
Absolutely.
if they want to do their due diligence and their research.
That's true.
What if I just take off my Scooby-Doo mask and secretly BitBoy or something. Like, could you imagine? No, I'm joking. Guys, if you enjoyed today's stream, make sure to hit that like button. Consider subscribing to the channel. Make sure to follow everything that Vet has down below. Crypto Vet is his screen name. Harry is his real name. Make sure to check out everything Harry has down below. He's got a lot of amazing things going on. And also make sure to sign up for Lux Algo. You've seen it used today, and it is a very powerful tool to help you in your trading and your investing in the cryptocurrency space, and it will help you to be able to understand where Bitcoin is and where Bitcoin is going. Tim, do we have any super chats that we need to read?
We definitely do.
I'm sure we do.
Well, I can see one right here, so I thought there was more than that. Nico Wild said, thinking doubling money supply means equal eventual inflation is zero-sum ideology. It's met by a growing pie too, correct?
Well, it is met by a growing pie, but the problem is the pie isn't growing. So that is a factor, and that's a positive factor. But the negative factor that counteracts that is the fact that you destroyed the economy through the inflation, and you've shut down the supply chain for a couple of years, and you've lost a year or more's worth of GDP across the board. So it balances out. That does end up tipping it a little bit in favor, but the thing is, it doesn't have as big of an impact as you think it would, because supply and demand is just a basic principle of economics. So I wouldn't put too much stock in that.
Yeah. We had a good comment though from one of I saw this earlier. Estimating one Discovery 3, so long name, said, I'm opening an IRA right now, transferring my 401k in this bear market. And I think that's really important that people are even looking at that stuff right now. I think there's a temptation heavily right now in the bear market to just stop moving and stop doing. This is the best time to start preparing for your future, not only because millionaires and billionaires will be made in this bear market, but
millionaires and billionaires.
But which a great joke from a while ago. When I think you put out some sort of tweet that you were like, this is the market that millionaires will be made. And then someone responded with, yeah.
Yeah, from billionaires.
But
they said, yeah, from billionaires.
Funny joke. But in all reality, in all seriousness, they're not going to become, if you purchase right now, you're not going to become a millionaire tomorrow. You'll become a millionaire here a couple years from now. Even with that concept, I just loved what he was doing there. And if you guys don't have a place to do that, obviously we have a partnership. We have an affiliate with I Trust Capital.
Get a $100 funding reward too.
Do it. If you don't want to do it, don't have to do it. Like, no pressure whatsoever. If you want to support our channel, that's one of the ways you can support our channel. But it's not even about supporting our channel. It's about supporting yourself and your future. Roth IRAs and 401ks and protecting your Bitcoin from taxes, because that's another big deal, is that people are going to take all this profit in Bitcoin and then they're going to have to pay massive amount of taxes on it. One of the ways to avoid that and to set yourself up for a nice future is a Roth IRA. And But yeah, other than that, I don't think we have any other chat.
Well, Matt just donated, Matt C just donated and said, thank you to Harry for jumping on. Always great to hear your opinions, and I'll throw in a little extra for Tim's hair. That was very kind of you, Matt C.
Does that mean he's giving because I showed my hair, or is he giving a statement that I need more hair?
That's kind of weird.
A transplant or something?
We're making money from you showing apart your hair.
I just want to note that you have such a beautiful full head of hair.
It's true.
That it's almost sad that you hide it so often.
That's true.
You know what I mean?
That's true.
Like you have what so many people wish they had. You know, you should wear
a cool beard.
Wear your hair out.
It just means that every morning I have to be mindful of what my hair looks like.
It
is so much easier just to put a hat on.
That's why I wear a hat. I mean, look at my hair.
Bro, your hair looks amazing. What are you talking about?
Well, I don't like fixing it, so.
I don't need to fix it. Okay, well, we could go on all day about hair, but we're over time. Guys, if you enjoyed today's show, smash that like button. Let's see if we can't get over 600 likes for the end of this stream. Make sure to follow us on all of our social media at CryptoJebb, over on Instagram and Twitter at CryptoJebbOfficial, over on TikTok, and stay tuned for the afternoon content that will be coming up shortly here on the channel. Guys, it was a pleasure having all of you. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.